Hey, good morning. This is Mayor Valensky with Driving Markets. So yesterday, markets came off for two particular reasons. What was driving markets yesterday was number one, the downgrade by Moody's, the credit rating agency of the regional banks, and some top tier banks may be threatened. That pushed the sector down, and the overall mood atmosphere on Wall Street, the markets, is that there is going to be another liquidity crisis. So the banking sector is under threat of another liquidity crisis. I've been mentioning this already for several months. The regional banks are lacking money. One of them in particular was Capital One. Now, Capital One is everyone wears a credit card, it's got a bank, it's got a huge network with about $471 billion under assets, and that is going to be impacted if there is a liquidity crisis. Furthermore, other rating agencies will come and probably downgrade the banks. So be aware that the banking sector is under pressure. Now, if they do go into a liquidity crisis, obviously we're going to have the rescue of the Fed and the US Treasury. I've stated this over and over again. What was the other factor that was dampening the mood on Wall Street and equity markets is inflation. Retail price inflation is out in the US today, and manufacturing inflation, PPI, producer price index, is out tomorrow. And there is a concern that even if inflation stays the same as the previous month, it's not going down fast enough. And if it's not going down fast enough, the Fed may raise rates further. In my opinion, if they raise rates any further, they're going to kill off the US economy. Also in the UK, if they raise rates any further, they're going to kill off the UK economy. There is not enough scope or parameter of absorption of pain within the economic environment at the moment by the local businessman or Joe Public or the everyday man can absorb further interest rate rises. So as loans rise, mortgages rise, cost of borrowing rise, that is going to have a major impact, obviously, on the economy and on the businessman. So rates shouldn't really rise, but the Fed, the UK MPC and the European ECB and the Canadian Bank of Canada and Australia all in a predicament where if they have rock solid inflation or rising inflation, they're going to have to raise rates, and that could be the death bell of the Western global economies. Now, looking essentially at where we are regarding asset prices, gold has come all the way down to 1,917, 1,913 yesterday. It looks like at these levels is building up support about the 1,900 level. So those of you who are precious metal traders may be looking at going long a gold at these levels with a tight stop at 1870 or 1865. That is one that you really should be monitoring because it bounces off. Recently, it's been bouncing off the 1900 level and then moving back up. So those who are precious metal traders, keep an eye on gold, obviously, and on silver. As regards foreign exchange, the dollar has been pretty resilient lately. It's come to a 12-month low. It looks like it's not breaking below that low. In order for equity markets to rise, the dollar has to continue falling. If the dollar does not fall further, then you could see equity markets come off further. Talking about equity markets, I'm expecting the tech sector, the Nasdaq, to continue falling. Why? Because as the threat of interest rate rise, or if the yields on the 10-year treasuries rise, that means the cost of borrowing is going to rise, and the Nasdaq and the tech sector are very hypersensitive to rising interest rates. Rising interest rates, cost of borrowing, that impacts the Nasdaq more than proportionately than the other indices. So keep an eye on rising yields. The tech sector, looking at three particular stocks, or the three particular stocks that could be under threat, which is Meta, which I've said yesterday is going to come off, and it did come off. Meta is Facebook, essentially. You've got Apple, which I can see it floating down to about the 150 level. You've got Tesla, which has come well below my target price of 245, and now looks like it's going to the next level of 225. And the other one, which is actually a fourth one, I apologize, is Nvidia. Nvidia looks well overvalued, well overpriced, and it looks like it's going to be some serious profit taking, especially if the tech sector continues falling, which I expect it to. Remember, not everything falls down in a straight line. There is bounces around, so be aware of those bounces when trading. Bitcoin, interestingly enough, is trying to climb up to the 30,000 level. It's not reaching it there, but it's something to keep an eye on, because as there is more or deemed to be more liquidity crisis, then looks like Bitcoin moves up. It's not a safe haven, but some people deem it as a safe haven. I personally don't. I think it's very high risk, therefore can't be a safe haven. But essentially, safe havens are moderate to zero risk. So Bitcoin is not moderate to zero risk, therefore can't be a safe haven. But as far as the crypto is concerned, or the cryptocurrencies are concerned, it is deemed as a safe haven for some, and normally some particular reason. I really don't know why. That's more or less it for now. So what we'll do is we'll catch you. You can share, subscribe, comment. Catch you later, and speak to you soon. Have a good day.